Good afternoon, everybody. Welcome to this video on how I will be choosing to invest my $1,600 in my Robinhood portfolio. My goals for this portfolio are to provide growth over the year of 2023. Of course, I will be choosing to buy and sell certain stocks depending on how the outlook of the companies are doing. With that being said, let's get right into the portfolio.
Now that we have hopped into Robinhood, I'll give you a quick skim through of all the stocks that I'm currently in possession of. Along with all these stocks, I have recurring investments going into each company that I own. This is a trick that I'm using that's normally known as dollar cost averaging. It's to basically average out the good days and the bad days of each company, even though I'm doing it bi-weekly. We're going to jump in top to bottom, so starting off with Amazon. Amazon I was actually bought into when it was around $99 per share. We saw it shoot up a lot over the last week, actually, reaching heights of about $112 per share. Long-term wise, I'm extremely bullish on Amazon, especially with their earnings report that came out, I think, last week. We could call Amazon more of a swing trade, as I don't really plan on holding this for a long time. I feel like I'll hold it until it roughly reaches around the 130 to 140 range, which would give me a little profit. Right now I am down $1.11, but I'm not really too worried about that. I'm also averaging it out with a bi-weekly investment of $10 in, so you can see what I'm working with right now. Next, I'm into Apple. Apple is more of a risky one. We've seen them break into banking, which I think is the main reason why I'm putting a good amount of money into Apple. I think with all the bankings kind of taking a downwards turn right now in this American economy, Apple released their banking information right before their earnings. We saw their stock shoot up. It was bouncing around in the 160s, took a dip, and then bounced up. So I've held this share of Apple for my average cost of $165, but I've had a few reoccurring investments go into it, so I don't know what originally my share cost was. But I see Apple hopefully breaking into the 200s. I think we could see an all-time high for Apple. Overall, Apple, I mean, it's a promising long-term investment. So I think if Apple is not in your portfolio right now, I think it may be a good time to add Apple. But then again, that is just my opinion. I will be holding this Apple, I hope until it can hit roughly around that $200 mark, and then I'll look at selling. But for right now, I will be holding. Next, we have Google. Google might be my most bullish stock in my portfolio right now. We could see that in the year of 2021, or the last ending of 2021, early 2022, it was reaching all-time highs of high 140s. Saw a major dip into the high 80s, low 90s, just starting to break up into the low 100s area. I think that with all the hype of artificial intelligence, I think Google is going to profit astronomically off of this. If you don't have Google in your portfolio, my best advice right now is to pick up half a share, whatever you can financially afford. Put some money into Google, because we could see it take a downwards dip, but I'm not scared of losing a little bit of money right now. If the hype of artificial intelligence continues, like I think it will, into 2024, Google can profit immensely off of this. Next, we have Microsoft, another artificial intelligence heavy stock right now that has been breaking headlines. We saw with their earnings report, they jumped up. I believe it was like 10 to 20%. They were sitting at 280s, dipped down. Microsoft has been killing it with the artificial intelligence. I think right now the main race for artificial intelligence is between Google and Microsoft. So that's why I have money put in both of them, to hopefully the one that ends up winning the artificial intelligence race, it can cancel out that loss from the other company. Right now, you can see I have just one share. I'm actually not dollar cost averaging Microsoft right now. I'm just riding the share and seeing what it can get me. I'm a firm believer in every portfolio should have some gas, some oil, and some energy stocks. We've seen energy and all oil companies take a large hit in their stock price. So I'm treating this as a good swing trade opportunity. Dollar cost averaging it to hold for the long term, especially with talks about the US currency falling at a rapid rate. We're going to see prices in oil, gold, and assets of those kinds increase a drastic amount. Next, we have C3AI. We are breaking into my more risky side of my portfolio. Like I said, artificial intelligence, I do believe, is the future. I think right now, for an investor trying to see growth in their portfolio, putting some money into artificial intelligence stocks could be a wise idea. Once again, this is more risky, but granted, I only have roughly $40 into the company. I think that if C3AI can make some improvements within the next year or two, become a profitable company, and maybe merge with those bigger companies, we could see their stock shoot up to enormous amounts. Maybe around that 40 to 50 to 60 range. If that's the case, I would sell it, but now I'm just kind of holding. Next, we have my gold trust fund. This is something that I'm sitting on. I'm dollar cost averaging. Will I ever sell this for right now? For the next 1 to 3 years? No. I do not believe I will just be pumping more money into this gold trust fund. Like I said earlier in the video, with the US currency weakening, you have to put your money in assets that are going to upgrade when that currency is falling. Historically, that means gold will shoot up. So that's kind of the move that I'm playing right now with this one, especially because right when the talks that the currency was going to start folding under other foreign countries, we saw this stock jump, and it is not a typical sight to see a gold trust fund jump like this in a matter of a month and a half, 2 months. Next, we have Newmont, another gold producer. I think this could be a great swing trade idea. I'm dollar cost averaging them, bi-weekly buy of $10. Right now, I'm down. Their last month has not been the greatest reporting, but to me, I'm not too concerned. Like I said, all the gold and the oil plays will be a long term. I'm looking to scoop them up at a lower price, sit, lose money short term, but long term, hopefully turn profitable as our currency does look to be getting weaker. Next, we have Barrick Gold. This is another company, another gold manufacturer that I could see profiting a decent amount off of our currency weakening. We could see in 2020, this was around the COVID times, they reached an all-time high of roughly, I don't know, $25 to $30. I don't know if it ever actually did break 30. It was skimming that range. But I think I'm just bi-weekly buying in with $4. Nothing too fancy, nothing too big. If it were to jump up to 25 to that 30 range within the next 6 months, I think then I would look at selling. But for right now, I'm just sitting. Next, for all my degenerate stock investors, I have DraftKings. DraftKings, I could see turning into a huge investment opportunity as we see sports betting getting more and more legal almost by the half-year range. I mean, that is just a rapidly growing investment opportunity that DraftKings is. Obviously, they're at the top right now. Of the sports betting books. You see them sponsor roughly anything. You watch a sporting event, you will see DraftKings get mentioned. I think right now it is a great idea to put some money into DraftKings and pick up a few shares. Their earnings report, I was actually looking at DraftKings, I want to say it was earlier this year when they were around maybe the $16 mark. I was looking at picking up a few shares, never did, bit the tongue. Bought it at around, I've been averaging $4 every 2 weeks. I think I picked up my first share around that 19 right here mark. Played the earnings, played it well. I think sitting on DraftKings, sports betting is only going to get more legal, more bigger. I think it's only legal in, correct me if I'm wrong, 7 to 10 states in the United States of America right now. Once that reaches an actual national scale, this stock could jump. I think the growth opportunity in DraftKings is unspeakable right now. Diving into more oil, I have Conoco. Obviously, when Biden was first admitted into office, they passed the Conoco drilling over in Alaska. I think that right now, Conoco is a great investment for a swing trade. maybe we could see a dip more. It's dipping pretty low right now. If it's under $100, I would secure Conoco as a pretty good investment to put your money into. I would think if we saw a dip into these 80s again, I would pick up maybe into the double digits of shares. But right now, I'm playing this swing trade. It's okay to lose a little bit of money on it right now. Don't have much money into it, actually. $20 with a bi-weekly investment to kind of average out those good and those bad days of the oil industry. Next, we have Meta Platforms. We saw them produce a great earnings report, actually. And after that earnings report is when I picked up a half a share, a bi-weekly investment of $10. This looks to be one that I sit on. If it can reach any of the height that it was in early and late 2021 into that 300 mark, that would be phenomenal. I think with all the hype around artificial intelligence, Mark is going to be doing a great job of profiting off of his Meta stock. Next, we have JP Morgan and Chase. We have seen banks fail left and right. First Republic, Silicon Valley Bank, all JP Morgan Chase has done has profited off those banks falling. So right now, my current investment strategy on playing this is playing a little swing trade until it gets up into those 150 to 160 range, and then I will sell everything I own in JP Morgan. Right now, I'm bi-weekly. I'm actually weekly investing $10 into it to get more of a kind of heavy weight of shares on my JP Morgan accounts, but I am bullish on JP Morgan. I think we can see a swing trade. I mean, historically, we're going to see a drop. We see it shoot back up into these time frames. So I think this is a great time to maybe put some money into JP Morgan. I think we could see it drop into the 120s, but I think long-term wise, we will see it back up into that 150 to 160 range. And that is personally when I will be looking to sell everything I have in JP Morgan and Chase. That was my whole portfolio. That is how I'm choosing to invest my 1.6K in my Robinhood portfolio. So I hope you guys enjoyed. I hope that maybe this could give you a few tips on how you look at placing your money. Just trying to provide one knowledge to somebody else. I'll be providing more and more updates on how this portfolio looks within the incoming months. But until then, I hope you have a great day and take care. Thank you for watching this video.